Hi viewers, welcome to Commerce Success Channel. In this video, we'll be discussing on the financial management, its main objectives. What is financial management? But what is finance? Finance is nothing but money. Why is finance needed? Finance is needed for all the purposes of spending. Finance is needed to start a business, to run a business. So managing the finance is financial management. Now let us see the definition of financial management. S.C. Kuchal defines financial management as the procurement of funds and its effective utilization in the business. So, sourcing the funds and then effectively utilizing it in the business and getting some profits and increasing the wealth of the business is the main scope of financial management. Now let us see the objectives of financial management. Actually, there are basic objectives as well as other objectives. We will see first what is the basic objectives of financial management. In basic objectives, we have profit maximization. The other one is wealth maximization. First, let us see what is profit maximization. Profit maximization is maximizing the profits for the business. What is profit? Profit is the tool or yardstick to measure the efficiency of the business. Normally, in a business, we have to have some input, the resources, and then we get some output. The resources are scarce in the world. So, you have to use the scarce resources and try to maximize your profits. This is the concept of profit maximization. But, learners, the profit maximization has certain strong criticisms on this concept. What are the criticisms? The first one is ambiguity. The term profit itself is not clear. Why? When I say the word profit, it may mean several meanings. It may mean a long-term profit or a short-term profit. It may mean a net gross profit or a net profit. It may mean a net profit before tax or net profit after tax. So now, the profit term itself is not clear. So this is a strong criticism of profit maximization. The second criticism is the time value of money is being ignored in the concept of profit maximization. First, let's try to understand what is time value of money. Time value of money is, suppose I have 1 rupee at present which I am holding. Now I compare the same money after 5 years I am getting 5 rupees. Now is this both equivalent? No. The 1 rupee value now I hold is greater than the 5 rupees which I am going to get in the next 5 years. So, the time value of money is ignored in the concept of profit maximization. What we are trying to do? We are comparing the current profit with the profits of future years, which is not correct. Hence, they are saying profit maximization is not correct. The third criticism is the risk factor. Now, what is risk factor? I am trying to predict a profit in the future. So, I don't know, because future itself is an uncertain thing. For example, let us say now in the current situation, that COVID situation, in 2018, would anybody have thought about a COVID? No. So, we would have anticipated much higher profits. But what has happened in 2020? Because of this COVID situation, there are huge losses in the business. So, future is uncertain and so the profit maximization concept is also not correct. So, the next main objective is the wealth maximization. Now, what is wealth maximization? It is trying to maximize the shareholders' wealth. It is trying to maximize the market price of the equity shares. Now, what is equity shares? Equity shares is nothing but personal ownership holdings in a business. Okay. So, you are trying to increase the shareholders' wealth. The concept of wealth maximization is the financial manager always tries to do or make such decisions and such activities which will increase the net present value of the firm. This, when it tries to increase the net present value of the firm, it is also increasing the value of the firm, and as a result, the market price of the holding is also increased. As a result, the shareholders get benefited out of it. How do they get benefit out of it? The firm is paying regular dividends. As a result, the shareholders' wealth is also increasing and the market price increases, the shareholder is benefited. So this is the concept of wealth maximization. It is also called as value maximization or net worth maximization. Now, let us compare this profit maximization concept with the wealth maximization. Now, in profit maximization, what we are aiming? We are aiming to maximize the profits of the business. But it has the following criticisms. Profit is ambiguous. It ignores the time value of money. It ignores the risk factor. But in wealth maximization, we are trying to increase the shareholders' wealth. We try to increase the net present value of the firm. So, when we try to increase the net present value, it automatically increases the market price of the firm. It increases the value of the firm. It increases the market price of the firm and also increases the shareholders' wealth. So, here in this concept, the time value of money and the risk factor is considered. Also, it is very clear when you are trying to increase the wealth. You can compare this wealth with the next year or future wealth. So, all the three criticisms are eliminated in the concept of wealth maximization. Okay, so what do we infer from this? We infer that wealth maximization is more ideal and operational. It is very practical in nature. So, this objective is very strongly ideal. There are some more objectives of the financial management. We can say the return maximization is one of the objectives of financial management. Also controlling the finance, managing the risk of the business. All these are also objectives. The financial manager is always trying to support the decisions by way of increasing the shareholders' wealth. So these are all the objectives of financial management. He is also trying to safeguard the assets of the business. So we have the basic objectives, which is profit maximization and wealth maximization, in which we saw wealth maximization is much more better than profit maximization. Also we saw that other objectives of the financial management like controlling the finance, managing the risk, compliance, safeguarding the assets, all these are also other objectives of financial management. If you like this video, press the like button. Subscribe for more videos of the same type. Thank you viewers. See you in the next video.